video on YouTube shows you the reality of what it's like trading reversal patterns. I'm going to show you real examples and real trades for each pattern, not just looking at hindsight on a chart. If you can understand and combine all these simple patterns, you will be able to easily spot reversal opportunities in the market that you can consistently make money from. Now, the first pattern is probably the most powerful and consistent pattern I've found over my 7 years trading the market, and it's called a failed breakout. How a failed breakout works is when you're watching the market, you have something like a previous high and the market breaks above it. And so what happens is a lot of people are watching that and they like to buy the breakout of a previous high. And so a lot of people jump in long, and the market will totally work like that sometimes. There's nothing wrong with being a breakout trader, but what I've noticed is if that breakout starts to show weakness like we have here, it starts to go sideways, well, it can fail. And what happens is a lot of people get trapped up here betting that the market's gonna go higher. They're expecting that, it's a new high, we're gonna keep going up. And in reality, that doesn't work all the time. And the market instead fails back lower. And so for me, what I did is I saw this in real time. Right now, I'm watching the NASDAQ futures. That's what I like to trade. I jumped in on a short, betting that the market was gonna go down from that failed breakout. And I was able to capture a really nice win here. The market went down a lot in my favor here, and I was able to capture a really good trade. And so this is a recording of my trade that I took using that failed breakout pattern, and I was able to capture a really nice $800 win out of that. And so another thing about failed breakouts is they can almost be micro failed breakouts too. Right here you can see the market had about 4 matching highs right here, and then the market sold off from them. And so sometimes people would get in short thinking that, okay, the market's just gonna go lower here. And instead, what I do is I wait for that failed breakout. I wait for the market to make that final attempt to keep going higher, and it barely breaks out of the market right here. This little wick right here is showing that the price essentially went down here and then barely broke above this previous high, and now it's starting to go down. And so that's what I consider as a failed breakout. And the biggest thing is to think about it like the market right here is making that final attempt to keep going higher. It's using all of its energy to keep this uptrend going and break the highs, and it gives up and loses all of that momentum and strength. Think of it in terms of supply and demand. The demand really dries up and it's able to just fall from that point. And I'm able to capture a really nice swing on this. And I was able to capture about $600 on that failed breakout pattern after I closed out my trade. And so probably the most important thing to combine with your failed breakouts is look at the market right here. And so right here, the market was trending down in a nice methodical downtrend, not many pullbacks, nothing crazy. There's a pretty clear downtrend line here. And then it broke and started to find some strength here. And then all of a sudden, it just flushed lower really, really fast with no pullbacks at all. And so for me, what I do on that is I think that, again, going back to the failed breakout idea, is the market's made that attempt to keep going lower as it's doing that final sprint. But one thing to think about here is look at it in terms of it's an unhealthy move. There's just no pullbacks. And so again, the idea with that is once that it loses that momentum and starts to kind of go sideways here, I see an opportunity for it to flip. And so in this case, the supply now has dried up and there is a ton of demand, and the market pushes back above. And so combining kind of this flush lower with a failed breakout, because you can see there's a little low here that it failed to break out of, that is a massive catalyst into finding and making these failed breakouts work, is having that flush and that breakout. And so there I was able to capture a really nice swing off of that, getting about $1,800, I believe, on that trade. Now, the one pattern I think is probably the most powerful and consistent other than the failed breakout is look at this market right here. The market's trending up in clear higher highs and higher lows, and that's kind of how an uptrend works. And so how an uptrend then flips is just, the market starts trending down, right? And so it starts making lower lows and lower highs. And so because of that, what happens is it makes a very consistent pattern right here, and it's called a head and shoulders pattern. And so once you kind of see it right here, and it makes this lower high, where this high right here is lower than the one before, it's showing you that there's a potential for a shift in the downtrend, and we might start to get this afterwards. And so again, you know, with trading, you're always just trying to predict what the market's going to do. Nothing's guaranteed. Just because you see a head and shoulders pattern right here doesn't mean that the market is all of a sudden just going to shoot down. It could totally just go sideways, or it could totally go up. And that is just a part of trading, right? It's all about the odds and setting it up in your favor. What we're trying to do with all of these patterns is increase your odds of having a successful trade outcome. And so with this trade, you can actually see I also had a little fail breakout up here. And because this box up here is a resistance level that I'm watching, and so the top of this is the previous high. And so this wick of this candle right here barely broke above that. And so I would consider it still that kind of an attempt at a breakout, because you can totally have times where the market comes up here and reverses right here. And so it doesn't even try and break out. It attempts to break out here. And so because of that, you know, we have our head and shoulders start to form once the market moves down here. But then the key is to wait for it to make this other pullback. And so the hard part about this pattern is a lot of the time in this area, when you are seeing the market sell off right here and start to make, you know, a big bearish candle right here, it's starting to go lower. It's hard to not FOMO into that and think, oh, I've missed it. You know, you can even see this uptrend line here. It's broken that. And, you know, you think you're going to miss out on the move. You know, you're expecting it to happen. There's a resistance zone up here. And so you have to be patient and wait. And, you know, if it does just sell off from there, just accept it and move on. The pattern is more consistent and profitable. You know, a clock is correct 2 times a day, you know. Going short or buying the market in some random direction at any time, you could be right generally 50% of the time or something. And so learn to be patient and wait for the strategy and pattern to show up, because you will find so much more profitability in doing that. And so once it makes this, you know, pullback right here, what I like to do is get in on this bearish candlestick right here, because to me, if you kind of read into these candlesticks right here, is, you know, from the high here, the market has come up, sold off, and then these like 4 candlesticks kind of show the market pulling back and then reversing it. So I think that makes that lower high right there. And so I jump in on that. And from there, I put my stop above this lower high, because, you know, my thought is, well, if the market kind of breaks above that, I think it's going to keep going in an uptrend, and you know, you got to move on, right? Trade's just not working out. And so it gets close here. And so that's where you have to just give the trade time to work out. You have to let things play out and not move your stop loss too quickly. You want to give time for the pattern to start moving, because, you know, still here, it still looks really good. And even when it kind of got close to knocking me out, you know, it could still look good. You don't know what the market's going to do. And so from there, the market started to go really well in my favor. This is a 5-minute chart actually of oil futures, which is what I was trading. And I switched to a 1-minute chart to manage it, because I saw that it was in a really tight downtrend. And just going with back to our, you know, idea of flushes. Well, if the market flushes down, it's likely that it could flush back really quickly. And so that's why I close out as soon as it breaks that quick flush down. And I close out for a nice profit right there. Now the head and shoulders pattern and a fail breakout doesn't show up all the time. And so another massive, powerful pattern I found is a simple double test or a double top. And so here the market basically makes a double top, and I look for a reversal off of that. And so a lot of the times I see people expecting that it's only double top if it perfectly tests the same price. And that's not true. A double top can be something like this, where it gets close enough and it essentially makes a double top. And so right here, you can see that the market came up, bounced, started to, you know, show some weakness, and then came up here and sold off again and made a double top. And here it really almost made a triple top. And I was going to add on to my trade there, but I missed. Anyway, that's the biggest thing, is when you're looking for this double top, think of it kind of like it's attempting right here. There's some good strength here. And in a double top that's good, you want to see kind of strength like that fail. And so in this case, you can see this, there's a couple big bearish bars here and some failure. And so I got in after I saw this big bearish bar, and then a couple little flat bars here, and then another big bearish bar here. And so I kind of got in on the low of this little pullback but the overall trend and the double top held, and then the market flushed lower from there. And so, you know, of course the market could have kept going up here, right? But that's where risk reward comes into play. I'm risking in these trades generally 1 to 3 risk reward ratio. And so let's say, for example, I risk $100 and I go for, you know, $300. And so you don't have to be right every time. And so that's why these trades work out really well for me. Of course I have losses. I'm mainly just showing wins because those are, you know, just better examples most of the time, but they're the same exact trades, and you know, they just don't work sometimes. So this one worked out really nice. I was able to get another $800 win, which was about 3x the risk I took on this trade. Now, an even better example of that is this trade right here. Now, one thing, if you haven't noticed, is on all of these trades, I have a trend line, because the biggest thing is to make sure that when you're looking at for reversals is that this uptrend is broken. And so here, this is a super clear example. You can see the market's clearly in a nice methodical uptrend, and then all of a sudden, boom, there's a ton of bearish bars here. And then we have the market start to make another bullish move up. And again, looking for kind of that exhaustive move that it makes, or that attempt to keep going higher, fail. And so right here, it's starting to fail. And so my thought is, you know, it makes one final attempt to go higher there. And I'm thinking, boom, we got to get short right here, because once it started to lose that momentum there, you can see that it's going to give up. And so again, this doesn't happen every time. It's not guaranteed. It's more of, I've realized that over time, you have these pushes higher like this at key areas, that it's gonna sell off really well, and it's going to give you an opportunity to capture a high reward, low risk trade. This is my low risk reward tool, and those lines are, you know, 2x, 3x, and so I got out there at 2x once it kind of broke that downtrend. You know, maybe a little early, but again, I like to go for quick moves off of these levels. So take a look at this trade right here. Hopefully by now you can start to piece things together, that, you know, we're at kind of a support zone down here. There's a downtrend that started to break, and we're starting to, you know, there's kind of some strength here by this big bullish candlestick. And so the one massive thing that really turned my trading around with entering in at these areas, if I just pause this right here, is using some candlestick patterns. And so what I mean by that is, if you're looking for, you know, the market to come down and then reverse, well, the signal I like to jump in on is what is actually called a 3-line strike pattern. And so what that looks like, you'll have 3 bearish candlesticks, and then you'll have a massive bullish candlestick. And so this can show up in a ton of different ways, but this is a really clear example of that. And the whole idea with that is that the market is, again, kind of just like the last trade we looked at, is the market's moving down in its methodical downwards move, and then all of a sudden, boom, there's a massive switch in momentum. And you know, this can be, I don't know what it's from, you know, I just trade the charts, but maybe it's from, you know, from maybe some massive bank is like, hey, I like this level, we're gonna buy, you know, $10,000 million of whatever they're trading, and it makes the market move really quickly like this, and it creates this pattern. And so it can show up in a lot of different ways, but if you learn to read into the candlesticks, all you're looking for is some kind of quick reversal. And so this candlestick right here actually shows it really well. If I just zoom back a little bit, and we're watching this on 8x, so you gotta be quick. And so you'll see this candlestick shoot down and shoot back up. And so for me, you know, I'm laser focused watching this area, thinking about, okay, all these indicators are showing that I think there's a good chance we reverse here, and I want to see that final confirmation. And so if you watch here, as I hit play, this candlestick shoots lower and then immediately reverses very strong. And so right there, I put in an order to get long, and you can actually see it makes a perfect double bottom right here, where it just bounced perfectly off that. And so I don't even know if I saw that while I was trading, but from there, you know, all of these patterns start to combine. And so that's the biggest thing with this, is start to combine these patterns into these trades, and you'll be able to increase your win rate. And so from there, you know, not to spend too much time on the trade, I caught a nice win all the way up here. I closed out right here for about $1,800 on that win. And so again, that was a really quick, nice trade. But the key is always having these patterns show up really clearly. And so probably the most important thing about trading reversals and using all these patterns is you have to use them at key areas in the market. So this trade is on oil futures on February 20th. And so you can see oil was bouncing a ton up here. There's multiple times that it come up into this area and bounced. And so when I'm looking at that, I think, okay, there's clearly a resistance zone up here that you want to pay attention to, and then the market might sell off from. And so what I'm looking at there is a 15-minute chart. And so I have found that looking at larger time frames than what you're actually trading produces more important levels, because if you think about it, that's showing you the larger trend, and the larger trend is usually stronger than if looking at this 1-minute chart of the trade, the trend is usually weaker and faster. You can see now here, that's where these zones or these blue boxes are from. And so then once I see that, I wait for the market to come up into one of those areas, and then I look for all these patterns. And so to look at this specific trade, there was actually kind of a different pattern that I used to get into this one, but the keys always remain the same. And so just zooming back a little bit is when I got in, well, you can see that there's I have an uptrend line drawn here. There's kind of a clear methodical uptrend, and you can see it broke that. And so what do these big red candlesticks here tell you? Well, especially this really massive one, I think tells you that there is a lot of weakness all of a sudden coming in the market, or there's a lot of strength to the downside. And so if you compare this candlestick here to any of these other ones, anytime the market has pulled back, it's huge compared to them. And so that means, there's volume coming in the market, something's going on. And so for me, I really like that as a confirmation. But again, I like to kind of use that kind of potential head and shoulders. This you could see maybe was a double top here, and you could have got in short right here. But maybe my read on the market was I wanted kind of a stronger signal, looking for kind of that pullback and that head and shoulders to happen. And so you can see here, the market made a double top. I think this was a nice bullish bar attempting to make the trend go higher. And you can see it failed really nicely here. It had a really bearish bar actually. And so I got in right as that happened. And then from there, again, you got to let it play out. You can see it almost came and knocked me out again. Market seems to like to do that. It holds from there because again, the overall read in the trend, and now you can see kind of the overall uptrend there again of where that trend line was from. You could even draw it here. This was maybe a little bit better. But again, the main thing is it was broken. And then from there, again, it's just managing the trade. And so to go into my management style a little bit of how I read this is I like to go break even once the markets got moving. And you can see here in this trade in particular, some of them have just gone lower really fast. But sometimes you have the market where it just kind of goes sideways like this pretty for a while and then gets going. And so I don't like to move my stop to break even until it starts to kind of get some of that movement into play. You don't know what it's going to do, right? And sometimes it takes a while for that supply and demand imbalance to come into play and move in your favor. And there's no reason in getting out, once you see your signal, because you're scared that, well, the market's kind of choppy, it didn't give it to me right away. You saw the signal for a reason, you got in for a reason. Let the odds play out in your favor. Try not to let your emotions control what you do. It's okay to feel them, but you got to just go with your plan. And so for me, you can see actually there's now a support zone down here from a previous low. The market made a couple bounces here, and that's where this uptrend started. And so I'm really aware of that. And so that's the biggest thing with trading is when you're entering into these trades, I always like to make sure that there is good room to profit. And so you can see here, this is my risk reward tool that I actually made. I'm risking about $570 per trade. And you can see here, okay, if I get here, it's 570, 1140, and down here is about 1700. And I like to go for that 3x risk reward because that's, again, mathematically, that makes it so you don't have to be right every time. But if you're, even if you're right 50% of the time and you get 2 to 3 times your risk on average, you're doing great. You are a profitable trader at that point, right? And so that's where combining all these things really comes into play. And so the market here gets down to there, and I decide to close out at that 3x for a really nice win because it's at that support level. And so I didn't go over supply and demand levels or support and resistance levels that much in this video, but they are the make or break of trading reversals. And so in this video, I'm going to walk you through the 5 key concepts of finding the best supply and demand zones that you need to use every single time if you want to be a successful trader.